Welcome back. You're watching Market Fatafat on ET now, and moving on to the next stock that's at focus at stock number 18. Jinai, we're going to talk about Gensol Engineering. Why have you picked out this one? What's the news flow?
Company has been allotted a green shoe option of about 250 megawatts by GUVNL, that is Gujarat Urja Vikas Nigam, to reach 500 megawatt battery energy storage system project, that is BESS project. Now with this order, the total order book of BESS stands at 3,100 crores. Now talking more about this project will be supplying electricity on demand to Gujarat's discoms during peak and off-peak hours. Also, this project, including the first and second tranche, will generate a revenue of about 2,685 crores over the period of 12 years for the battery energy storage system purchase agreement. And if you look at the stock is trading up at an upper circuit of about 5%.
All right, Gaurav, coming to you. You picked out Tata Tech for us. Yet another brokerage note coming in from Goldman Sachs. Tell us what is the note saying.
Here actually Goldman Sachs has initiated with sell rating and a target price of 900 rupees. Now as we all know that Tata Tech was one of the most famous IPOs when it comes to the listing gains, but now brokerages are coming up with a sell rating, and the reason why Goldman Sachs is little bearish on this stock is that the base revenue from the key customer, which is VinFast, is going to decline according to Goldman Sachs in the coming days. Apart from that, company has an higher dependency when we talk about anchor customers, and if we compare it with its peers companies. Now company also has FCF profile. Because of the moderate growth, we may see the free cash flow growth also being a little stable, and they also believe that there would be better entry points ahead. Even if we talk about the street and the consensus, around 67% of the analysts who actually tracks this company has given sell recommendation or underperform recommendation. And if you look at the stock performance also, it is down almost by 1.5% in today's trade. So definitely watching out on what happens in Tata Tech in coming days.
Okay, surely keeping an eye out on Tata Tech in the coming days. An interesting one to watch out for. Absolutely, after a very long time, we saw listing coming in from the Tatas, and that's also seeing a lot of thumbs up coming in there.
Absolutely, Vinny. After a long time that we are seeing that. But moving on to the telecom space then, the telecom subscription data for April 2024 has come out, and if you look at the overall subscriber base, that has grown by 1.5 million on a month-on-month basis. The total active subscriber base was absolutely flat, but Jio has added approximately 3 million active subscribers. Bharti Airtel lost 2.1 million active subscribers, and Vodafone Idea also lost 0.6 million active subscribers. So Jio is the only one that has actually added subscriber to its subscriber base, and we can see the stocks right now. Bharti Airtel trading with cuts of 8.7%. Vodafone Idea is down 1.83%. And can we just if you look at both the counters, they are trading with cuts because of course they have lost the subscribers. However, Jio is the only one that has gained subscribers.
Yeah, and that Reliance is buzzing in trade.
Yes.
So keeping an eye out on that one. But let's move on and talk about Muthoot Fincorp. That's the one we are highlighting next. Is Investec has come out with a note on Muthoot Fincorp. Actually, they're initiating coverage. Buy is what the rating they've given. Target price of 350 rupees per share. As of now, the stock is trading at almost 250. So still 100 rupees more of an upside is what what one could expect, given the target price is 350 rupees. A differentiated microfinance model with a focus on underwriting is what is keeping Muthoot Fincorp a bit on the differentiated level. They believe the resilient industry, that is something with improved economics, works out well for the company. Growth which is strengthening the balance sheet, as well as they expect the AUM profit CAGR to be at 24% over the next 3 years, and valuation is something that they're watching out for, and currently is ignoring all the positives. So yes, attractive at the valuation front as well. So keeping an eye out on that one.
All right, now we're joined by Sneha Seth, who's the Senior Analyst, Technicals and Derivatives from Angel One. Hi Sneha, welcome, and thank you for joining us. Sneha, tell us, you have picked out Axis Bank for us. The entire banking pack has been in focus since yesterday. But in the last 6 months, Axis Bank hasn't done much for the investors. Tell us, is it time that the stock gives us a good move?
Good afternoon. Thanks for having me. So if you look at Axis Bank, yes, if we see recently private sector banks have done quite well after recent consolidation, what we were seeing here. Axis Bank, if we see, yes, this week it is up by nearly 5%, I believe. And we expect an up move, extension of this move towards at least 1270, 1280 zone. So I believe if anyone is holding any long position should be holding it, and someone who wants to take a fresh bet, they may also think of taking fresh longs. One can even think to buy 1240 call option. On the lower side, I believe 1180 should be acting as a support for someone who's taking a positional trade.
Okay, keeping an eye on that level there for Axis Bank. Junai, moving on to the next one. It's Blue Dart Express. That's the one you picked out. Why is this in focus?
So the company has commences drone deliveries, and they have launched this drone delivery services in collaboration with Sky Air, which is a leading technology in drone space. Now this move makes a significant advancement towards more cleaner and more efficient delivery solutions. Company says that this innovative approach is set to revolutionize the last mile delivery solution, especially by reducing the time and environmental impact. Also, the managing director of the company further says that logistics sector in India is experiencing an accelerating phase, especially because of nation's economic growth coupled with the growing aspirations in tier 2 and tier 3 cities, which have significantly boosted the purchasing powers of the nation.
Okay, surely keeping an eye out on that. Blue Dart Express is what we were talking about. Let's move on, talk about PNB Housing. This is a stock in focus. Today we saw a block deal that happened of 5.2% change of equity hands. That's around 13.6 million shares. So yes, what we had also understood and what reports were suggesting that the seller of this could be around Asia Opportunities Mauritius Fund, which would be there, as well as General Atlantic, though we're going to wait out for the names of the buyers and the sellers. But as of now, because of the block deal, we're seeing some bit of a pressure that's coming on PNB Housing. 5.2% change of equity hands that happen on the exchanges today for PNB Housing.
All right, moving on. Sneha, you picked out another banking counter, that is Bandhan Bank. In fact, Bandhan Bank is trading with gains of over 4% today. But tell us, in the last 6 months, it has actually not done anything for the investors. Tell us, what do you see on the charts for this one?
See, if you look at the chart structure for Bandhan Bank, recently it wasn't performing. In fact, I believe it has, recently, if you see last 3-4 months activity, it is making a strong base around 170, 175 odd zone. And I think considering the recent consolidation and finally this counter has surpassed the resistance zone of 200, 202 today. So I think we may see a follow-up buying and fresh momentum can even come in this particular counter. So if someone wants to go ahead and long any banking counter, then Bandhan Bank has a good risk-reward ratio. With a strict stop loss of today's low, one can go long, that is around 199. So 199 can be the stop loss. On the higher side, we can expect an up move at least towards 220, 225 zone. So if someone wants to go ahead and long, I think this would be a good bet.
All right, so that is Bandhan Bank. But moving on to another buzzer in trade, Vedanta. In fact, the stock jumped 6% after the news that Vedanta will raise 1,000 crore rupees via private placement of non-convertible debentures. Now, the company's board has approved the issue of 1 lakh debentures with a face value of rupees 1 each. But the entity is also likely to be listed on BSE. And on the back of this news flow, right after that, we saw a sharp up move, as you can see on the chart. A sharp uptick of 6% is what we saw on the stock.
Okay, surely keeping an eye out on that. But Sneha, you two have picked up Vedanta on technicals. What is the word on the technical front? Today's run-up that we are seeing is something that you're expecting to continue, because that trend has been there for the last 6 months.
Yes, very much, because if you see the overall chart structure was quite good, except for the fall what we have seen on the election week. After that, we have seen a very strong comeback, and after that, this counter was consolidating. However, today's price action looks very interesting. In fact, the volumes are also quite good. We are also seeing action in the out of the money call options. So I believe we may soon see it, heading towards 500 plus level. So if someone wants to go ahead and take a fresh bet this from metal space, I think this is the good counter. The volumes are quite good. One can maintain a strict stop loss of around say 455 and go long in this counter.
Okay, can go long in this counter even at these levels. Stop loss at 455. That's the word on Vedanta from Sneha. But on that note, we're going to slip into a very short break. We'll be back with more of the buzzing stocks after the break.
Welcome back. You're tuned into Market Fatafat, where we're taking you through all the stocks that are in focus today. Well, let's get started yet again with all the stocks then. Gaurav, I'll come to you. Gufic Bioscience is what you've picked out for us. This one is trading with gains of over 1.5%. Tell us, what is the news flow here?
Yes, as per sources now, Indore plant commercialization is likely to be next month for this company. The capex for this plant was at around 300 crore rupees, and the company will be focusing on a new niche high margin products from this plant. If you look at the size of this plant, the Indore facility itself is 1.5 times larger than the Navsari plant for this company. And even if you look at the stock price, it is up almost 1.5% now, given that they are adding new capacity. So definitely worth watching out for is Gufic Bioscience in the next few days.
Okay, surely keeping an eye on Gufic Bioscience. Let's move on to the next one. Deepak Nitrite, this fertilizers chemical space, Sneha, that's making the list for everyone, right? Finally seems like it's coming back. What is the level that one should be keeping an eye on Deepak Nitrite?
If you look at the chart structure, we have seen a very strong comeback from the 2150 levels. This counter is now trading around 2600. It has surpassed the hurdle around 2570 odd zone. I believe we may see continuation of this up move at least towards 2700, 800 odd zone. So if someone is holding any position in this particular counter, should continue to hold it with a strict stop loss of around 2520. And upside potential, as I said, it is around 2700 plus 2700 first, and then we can head towards 2800.
Alright, that is Deepak Nitrite. But moving on, Janai, you've picked up PI Industries for us. Brokerage note coming in by Jefferies. Tell us, what is the note saying? The stock is already up and away, 3.4% in trade.
Well, yes, so Jefferies have maintaining their buy rating and have hiked the target price to rupees 4,750 from the earlier price of 4,630. Now, management believes that they are confident on achieving its growth guidance despite destocking in its key products. Also, if you look at the company's export for April to May, it saw an uptick of about 20% year-on-year basis with the stable pricing in key products and traction across new molecules. Now, if you look at Chinese capacity in company's key product, that remains significantly underutilized, and with that, combination of patents in key products should also keep the pricing stable is what Jefferies believes, and that is what is keeping them positive over PI Industries.
Absolutely, but let's mark the flashes at the bottom of your screen. We're seeing rupee has hit a fresh record low level. It's weakened past the 83.50 mark against the dollar to hit those fresh record low levels for the rupee. A big one to watch out for there, hitting again a fresh record low on the rupee front, weakening furthermore versus the dollar is what we're seeing on Kita today. Right now, before we continue with the stocks, marking that was very important in terms of rupee falling below the levels that we've seen and new lows coming in there.
New lows coming in for rupee versus the dollars. But moving on to another stock, Mass Financials is in focus today, and it is on the back of the fact that the company has issued a QIP worth of 400 crore rupees with an additional upside option of 100 crore rupees. Now, the QIP's indicated price is 286 rupees per share, representing an 8.5% discount to the prevailing market price. And according to reports, the base size of the QIP suggests an 8.5% dilution of the company's ownership, while exercising the upside option would boost the dilution to around 10.6%. In addition, the promoter has a 90-day lock-in period. That is what the reports are suggesting. On the back of the fact, we can see the the stock trading with gains of 1.8% right now.
Okay, Shirley, let's move on to the next thing we're talking about is Religare Enterprises. We did have the SEBI that has pulled up Religare Enterprise Chairperson Rashmi Saluja and its board of directors for failing to comply with the securities law after government launched an open offer to acquire additional shares in the financial service conglomerate. It has been directed that Religare board is to seek the RBI approval within a week. Ankur is joining in with us to give us more details. The stock is trading with uptick of 4%, but what does this auto actually mean and how does it work out for Bourbon family as well as Religare? Let's go across that. Ankur?
Yes, finally we have seen a regulatory action coming in the case of Berman's versus Religare Enterprises. Now SEBI has directed Religare Enterprises board members to seek approvals from the 3 regulators on the open offer of Berman's, and that needs to be done by July 12. Now also here in the interim order, regulator has expressed unhappiness over the conduct of the board members regarding taking approval from the respective regulators. They have also sought written assurances from REL board within a week to comply with security law. Now what is the matter? Remember last year Berman's had acquired over 5% stake in Religare Enterprises, and after that the ceiling of 26% was broken, and as per SEBI law they need to go for open offer. Now for complying these regulations, REL needed to take regulatory approvals, but it did not do so, stating that it did not find Berman's to be fit and proper for acquiring the stake, and hence a letter was also written to SEBI regarding the same last month. But now regulator has clearly specified that Berman's should have sought regulatory approvals, and if at all regulator finds it is not fit and proper, that is a secondary issue, and that needs to be decided by regulator itself. Now what is the way forward? The Berman's had already alleged that Religare board chairperson Rashmi Saluja were blocking the open offer, and now regulator has clearly said that it needs to comply with the interim order and seek approval from 3 respective regulators, that is IRDAI, RBI as well as SEBI. All these respondents and the notices which has been sent to the Religare board members, that can be replied within 2 weeks. In fact, a physical hearing option has also been given by SEBI to all these notices.
Right, moving on to a programming note then, Narayana Health, one of India's premier healthcare providers, is rewriting the marketing playbook with a hyper-local and patient-centric approach. ET Now caught up with the founder and chairman Devi Shetty and executive vice chairman Viren Prasad Shetty on Rise with India, where the management stressed on how digitization and AI will have a massive impact on the health industry. Let's take a look.
Since 2016, we haven't really added many beds across our network. At that time, we had expanded to nearly every corner of India, starting from Jammu all the way down to Bangalore and from Gujarat to West Bengal. But we spent the past 8 years just focusing on our operations, focusing on throughput, improving the services across all our hospitals. And we've reached the most that we can do with those hospitals. Now, there is a huge demand for healthcare services. As you know, post-COVID, people are a lot more aware about their health. They want to get checkups done. They are more aware that a lot of treatment options are available. And so our capex has been quite intense for these past 2 years, and the next 3 years will again be similarly intensive. Our priority areas for the next 3 years are going to be our flagship centers, which are in Bangalore and Calcutta. But we're also looking at Delhi as a place for growth as well. The inorganic opportunities, there are many in India. As you know, there are a lot of healthcare groups out there that are looking, but we're very judicious in how we look at growing that way. The highest priority for us is to grow our existing network, and as and when these opportunities come up is when we take them up.
Also, Viren, you received the license to launch your health insurance business in India in 2024 this year. So what are your preparations to launch the products within that?
See, it has always been our ambition to start offering health insurance in India. Today, we have a scenario where patients don't trust the insurance company to pay out fully what they claim. Insurance companies don't trust the hospitals because they feel that hospitals charge too much. The doctors don't trust either the patient or the insurance company because they feel somewhere they're going to get into trouble. And so you have a scenario where nobody's trusting anybody and everyone is hurting. So our ambition is to launch health insurance where all parties work in an integrated fashion. And this was Dr. Shetty's ambition. So when we offer insurance for the lower middle class, and those who can afford, we will be offering the entire spectrum of services. We'll be offering primary care, we'll be offering home tests, we'll be offering consultation with the doctor, we'll be offering inpatient care, all in our hospitals. And this is a program that we're launching in Mysore next month, and we'll be rolling it out to all our centers, starting in Bangalore and then eventually in Calcutta.
Surely keeping an eye out on that conversation later on ET Now. But on the sidelines of ET Now Leadership Dialogues, we caught up with Navneet Manoj on where India is headed and how the markets can bank on the robust growth story for India. Listen into that as we bid you all goodbye. Thank you so much, Sneha, Gaurav, as well as Janelle for joining in with us.
So first of all, many compliments and congratulations to you, Ajay, Nikunj, and the entire team at ET Now for a wonderful 15 years. You guys took birth at a time when we were going through the global financial crisis. If I remember correctly, Ajay, you joined in 2008.
Correct. That's
amidst
correct.
the global financial crisis.
Bottom.
If I remember correctly, in March 2009, Sensex and not Nifty, Sensex touched the low of 8,000.
Yes.
And today we are very close to 80,000. So it's been a 10x
10x
journey
in
over the
15
last
years.
15 years. But of course, last 10 years have been really phenomenal for India and of course for you. So many compliments. And I'll give you a compliment for one more thing. The word that we use together, Jan Nivesh.
That's correct.
That Jan Dhan Yojana has been one of the big, I would say, reform by this government or a big movement by this government, getting 1 billion people into the mainstream financial system. Now we have to take it to the next level, which is like Jan Nivesh. How do we ensure that everybody also does the SIP? Talking about 2030, I think how the India's growth will stand out. We'll surely be the third largest economy in the world.
Okay.
Our markets are already fourth or fifth largest in the world. They will also become the third largest in the world. But I think the more important will be how do we ensure that growth is sustainable, equitable, and inclusive. And I think all the efforts of the government over the last several years have been in that direction and will continue in that direction because that will make India's growth model relatively more unique relative to all the other economies that have grown from an emerging country to a developed country.
Navneet, everybody keeps talking about India's market cap to GDP. Is it going on the higher side? Valuations, are they going on the higher side? How should one really, as an investor who's running money and every day seeing NAV is going higher, should we book out? Should we ride this? What is the right way of looking at valuation? And is it coming on the some basis of superior economic growth, etc.? What is your message
We
to
just heard the
investors?
governor, and I think we should compliment him. And of course, it was very inspiring. I mean, if you look at the overall macro environment from growth inflation dynamics, the external sector, which is in a great shape, the financial stability and the banking sector and corporate sector balance sheet, all of them are like really looking very good. The earnings growth over the next several years could be robust. Liquidity flow, particularly from domestic investors, have been very, very robust. I think a lot of this positive news on the macro front, on the corporate front, and because of the positive sentiments from the investors is also built into the price. So valuations are definitely, at least in parts of the market, maybe running ahead of the fundamentals. The way it will get corrected is by earnings growth over a long period of time.
This retail investor, the deluge of money from retail investors, they've emerged as a third front and outbuying FIS, selling big time. Does it look durable and structural to you? Because there's a view that usually they chase performance and the risk is that if performance goes down for any reason, this money may dry up or at least reduce meaningfully.
So there are many kinds of retail money. The retail money, the investors who are doing, let's say, investors or whatever speculators who are doing intraday, the people who are playing F&O, the people who are doing opportunistic, and the long-term investors who are doing in a very disciplined manner through the SIP. There are all kinds of retail money that's coming to us. The more positive I feel about is the structural flow of money through the SIPs. The other part of the money will depend on the market cycle. There would be cycles where, let's say, if market goes a little sideways to a little downward, you will see some of those players kind of maybe leaving the market.
A large part,
but a large part of the money that we are seeing from investors is very structural in nature, and I think it has a long way to go. Financialization of savings, we are at a very, very early stage of that in India.
One last word I want to talk to you about. We are talking about the next 6-year view from here on. And there's a lot of impetus in the government on one theme, which is manufacturing. Now it is such a huge theme. So many sectors get covered under it. Some new sectors, some older ones are reviving, and some are changing form. You have recently launched a manufacturing fund, which saw a very good response. Have you started deploying money already? You have
I think it's
great
almost
ideas.
fully deployed. I think almost in the portfolio is in public domain. The fund, I think, is already up.
Is valuation not a challenge in manufacturing? You're getting adequate ideas?
No, but the universe is very large,
Okay.
and you are playing the earnings growth over a long period of time.
So you see very good buoyancy.
If you like this video, then like, share and subscribe to ET Now.